There will be no quick video editing or flashy edits here, only useful practical information. And remember, the last point that we will consider is the most important. Enjoy the video. A stock chart may look intimidating at first, but it is really just a visual story about price, time, and investor behavior. Once you learn how to read that story, you can make better decisions instead of guessing based on headlines or hype. In this video, we are going to break down the basics of stock charts in a simple way that any beginner in the US can follow. The first thing to understand is that stock charts show price movement over time. The horizontal axis usually represents time, while the vertical axis shows price. That means every point on the chart tells you what the stock was worth at a specific moment. If the price goes up, that usually means buyers are in control. If the price goes down, that usually means sellers are stronger. The most common type of chart beginners see is the candlestick chart. Each candlestick shows how a stock moved during a set time period, such as 1 day, 1 hour, or 1 minute. A candlestick has a body and wicks, and both parts tell you useful information. The body shows the opening and closing prices, while the wicks show the highest and lowest prices during that period. If the candle is green or white, the stock usually closed higher than it opened. If the candle is red or black, it usually closed lower than it opened. This is one of the first things beginners should learn, because it helps you see momentum at a glance. Next, pay attention to the trend. A stock that keeps making higher highs and higher lows is usually in an uptrend. A stock that keeps making lower highs and lower lows is usually in a downtrend. Trends matter because they help you understand the direction the market is already moving. Many beginners make the mistake of buying just because a stock looks cheap, but a falling stock is not automatically a bargain. Sometimes a chart is showing you that the market has a reason to stay cautious. Another important idea is support and resistance. Support is a price area where a stock tends to stop falling because buyers step in. Resistance is a price area where a stock often struggles to rise because sellers appear. These levels are not perfect walls, but they often act like zones where the market reacts. If a stock keeps bouncing off support, that can tell you buyers are interested. If a stock keeps failing near resistance, that can tell you the price may need more strength before breaking higher. Volume is another key part of the chart. Volume shows how many shares are being traded, and it helps confirm whether a move is meaningful. A price move with strong volume usually carries more conviction than a move on weak volume. In other words, if a stock rises but nobody is really trading it, that move may not be very reliable. Many charting platforms also include moving averages, which smooth out price action and help you spot the bigger trend. A moving average is simply the average price over a certain number of days. When the stock trades above a rising moving average, that can suggest strength. When it falls below a key moving average, that may suggest weakness or caution. You do not need to memorize every technical indicator to start reading charts well. In fact, beginners are usually better off focusing on a few simple ideas first: trend, support, resistance, and volume. That foundation is often enough to help you understand what the chart is really saying. The biggest mistake new investors make is treating a chart like a prediction machine. A chart does not guarantee what will happen next, but it does show what has been happening and how the market is reacting. That insight can help you make more grounded decisions instead of emotional ones. For example, if a stock is breaking above resistance on strong volume, that may signal real interest from buyers. If a stock is falling through support with heavy volume, that may signal weakness that deserves attention. The goal is not to become a day trader overnight. The goal is to become a smarter investor who can read the market's language with more confidence. Once you can look at a chart and identify the trend, the support zones, the resistance zones, and the volume, you are already ahead of most beginners. So remember the simple formula. Price shows where the stock has been, trend shows direction, support and resistance show reactions, and volume shows strength. If you watched until the end, you now have the basic tools to read stock charts without feeling lost, and that is the first step toward making better investing decisions.